This Russian banking regulator was found hiding almost $100 million, all from bribes he was taking. But is taking bribes worse than running a fake charity? A story that we'll discuss later in this video. Number 5. Mr. Russia. Former Lieutenant Colonel Kirill Cherkalin was a financial regulator, and he was caught hiding various currencies and cash of at least $125 million. He used his ties to the country's Federal Security Service, or FSB, to skim money off the top, take bribes, and funnel illicit cash into his and his partner's pockets. Reports say his crime spree ran from 2013 to 2015. Cherkalin is no stranger to how corrupt Russian authorities work. After being raised by former members of the infamous KGB, he got his start with the FSB in 2011. After graduating from the FSB Academy in Moscow, he immediately achieved a position of power in Department K, the arm of the FSB that handles financial matters. It didn't take him long to rise to the top and begin heading up the department. During this time, Russian banks and worldwide economies were still reeling from the major housing and investment crash of 2008. This, combined with the build-up and eventual smaller crash in 2014, kept financial regulators busy. Cherkalin had plenty of time to build power behind the scenes. As his influence grew, so did the ways he could scrape cash from his endeavors. Russian banks were finding creative ways to steal depositors' and investors' money and even drain federal funds directed at fixing problems. The Russian government responded by dismantling nearly half of the country's banking industry. The FSB and the Bank of Russia worked quickly to clear assets on those banks and get payouts out to depositors when their banks fell. Some of those banks, however, received bailouts and stayed afloat a bit longer. In some cases, corrupt bankers could avoid prison without having to escape abroad, as many were doing. Cherkalin was a key figure in deciding who got bailed out, who went to jail, and which banks were dismantled. You can probably already see where this is going. Cherkalin, like many others, saw an opportunity here. Taking bribes from doomed bankers was commonplace, and Cherkalin's position gave him ample opportunity to indulge. In many cases, he worked with greasy palm bankers and allies in his department to swap out valuable assets with less valuable ones and funnel money overseas where it was safe from the Kremlin's eyes. Defunct banks obtained temporary funding to give Cherkalin time to pull off his schemes. Cherkalin's gains were primarily kept as cash and assets, from valuables to foreign currency in several locations. He kept about $200,000 in his car, for example. Meanwhile, he kept over $125 million in an apartment listed under his sister's name, Anastasia Cherkalina, and other amounts were kept around other family members, including his parents. He told those whose homes he hid money in that the cash was related to his job and didn't explain any further. It's hard to place a dollar amount on the damage, but the Bank of Russia had to drain far more of its holdings than planned. They had to pay off depositors and try to right the ship on closing banks. This resulted in an extra burden on Russia's federal banking reserves, which were already stretched thin just because of what was happening in the country and its financial market. Even in a market saturated with corruption, Cherkalin beat the record held by Dmitry Zakharchenko, a former anti-corruption official who was busted in 2016, to the coincidental number of $125 million as well. Cherkalin was caught, along with a few others in the department, managing similar operations back in 2019. As far as white-collar arrests go, this one got a little wild. Reports say that the fight with police left one of the conspirators with a broken arm. During Cherkalin's lengthy trial, he implicated the deposit insurance agency's Valery Miroshinov, who held several offices and ultimately answered to the organization's director. According to Cherkalin, most of his cash and valuables belonged to Miroshnikov. Other bankers corroborated his involvement but had to flee Russia since they were also caught up in the scheme. Testimony from various parties in the case indicates that Miroshnikov often appointed his own people to run target banks as representatives while they were either cleared out and shut down or pumped full of federal cash and revitalized. According to reports, Miroshnikov caught wind of Cherkalin's arrest and left Russia in a hurry, making it difficult to pinpoint his involvement and just how great the damage was. The hasty escape tells us all we need to know. As for Cherkalin, he was sentenced to 7 years in federal prison. This sentence was eventually shortened to 5 years in light of his time in detention during his trial. On top of the prison time, Cherkalin was stripped of his military rank and honors and banned from holding any law enforcement position for 3 years after his release. Asset seizures in the case amounted to approximately $80 million. Finally, he was ordered to directly pay back only a tiny part of what he was caught holding, the rough equivalent of $4.2 million a pop for 2 indirect victims of his crimes. Cherkalin's family also felt some heat for their involvement. Most prominently, an apartment that Cherkalin's father swears was bought with his own money was seized under suspicion that his son may have paid for it. Notably, his sister testified that he never gave her any material aid and didn't suffer the same penalty. Number 4. Accounts receivable. Common sense holds that a caught criminal won't repeat the same crime while out on bail, but that truth apparently didn't hold for mom and serial fraudster Lisa Trison. Between her original crime spree, time on bail, and parole period, the mother of one socked away over $300,000 from businesses dumb enough to hire her as a bookkeeper. The money was blown on luxury such as designer handbags, travel, illegal substances, and slot machines. The Mon from Torquay started scamming when she got a job in accounts receivable at Advanced Records Management, a firm in Australia. Before taking the job, she already had a long criminal record that was full of small financial offenses. You would think that the hiring manager would have caught that to keep her from working in accounting. Trison was caught altering documents in the past and was found in this case to be using other people's background checks, but with her own personal information edited in. When Trison got on board with Advanced Records Management in 2018, she began her illegal activities immediately. It only took her 4 months to get sacked for poor performance, but that was all the time she needed. By stirring up the records with all sorts of inconsistent and misleading information, she hid the fact that she was lifting tens of thousands from the business. The first hint of suspicion came a few days into her new job. She was accused of manipulating the refund process to route $2,500 into her account, but she cooked the books so well, nobody could prove anything. Refund fraud was only part of the scheme though, using false transactions, hiding her tracks, and at one point, even taking money from the boss's personal account, she funneled over $95,000 to herself. She only got caught after she was fired in November 2018. A simple audit revealed her crimes, and she was prosecuted. Trison was busted, but that was far from the end of her grand plan. When February rolled around, she confessed her crime in detail. She subsequently posted bail and did the exact same scheme at BARWON Timber, another accounting firm. False transactions, manipulated refunds, fudged records, and more tricks eventually saw her once again fired and charged after she was caught making off with cash. The baffling part here is that she committed the same crime while out on bail, but of course, she was able to post bail again, probably with stolen money. The companies that hired her trusted the falsified background checks that Trison had provided rather than checking into her themselves. Some simple due diligence would have prevented the second and third scams. For her third time, her victim of choice was the GEELONG Art Center, where she was employed when the story broke in outlets such as the Daily Mail. Somehow, before the cycle could play out a third time, Trison stole over $200,000 from her new employer. But before April of 2020 came around, she found herself out of a job and in a courtroom. This time, throwing some dirty cash around wouldn't be enough to buy her freedom. It was game over for Trison. She couldn't catch a break from the long arm of the law anymore. She rejected the magistrate's initial plea bargain offer and contested the ruling. That didn't end well for her. Her lawyer pushed the narrative that his client was an addict and needed help, asking for a short sentence with strings attached to aid her treatment. The prosecution, meanwhile, pushed back with eyes on the high-end lifestyle she was funding for herself with the stolen money. Ultimately, she was sentenced to a minimum of 4.5 years before becoming eligible for parole. Only time will tell if she'll end up in court again. Number 3. Dodging bullets. SHANIA SCHWERIN stole $187,000 from her employer without ending up in jail somehow. SCHWERIN started with Neil's Parts, a chain auto parts store, in 2019. She was brought on as a bookkeeper and used the job to access systems that would allow her to skim money over time. Her scam involved two different approaches. The first piece of the puzzle was the company's EFT-POS machines. If you've been to a store and used a credit card within the last couple of decades, you've used one of these machines. They can be programmed with various options and parameters, chief among those being where payments go. SCHWERIN messed with the shop's EFT-POS system, directing it to drop money from refunds into her personal bank account instead of returning the funds to customers. During her 9 months employed, she pulled this simple grift a stunning 108 times. The transactions average over $1,000 each, given how much money she stole. Stopping at that step would have gotten SCHWERIN caught immediately, so she went on to cover her tracks. For each transaction she handled fraudulently, she went into the company's record-keeping system and edited the transactions to appear genuine. With the customer's account information available from their original payment, she wasn't exactly forced to move heaven and earth to accomplish this. As far as anybody in the company could tell, all was as it should have been. It took them 9 months to catch on, finally firing SCHWERIN and bringing charges in March 2020. Police interviews with staff concluded that all refund transactions had to be greenlit by branch managers company-wide, making her scam seem that much bolder. The most likely culprit had to have been customer complaints after all. Customers who didn't receive their refunds would know something was a little off. When SCHWERIN was busted, she pleaded guilty to the charges set before her, which consisted of using deceptive means for financial gain. With many material facts still in the air, the court scheduled a disputed facts hearing. This is where the court figures out precisely what happened and what SCHWERIN confessed to. That hearing fell through in May of 2020. SCHWERIN's party told the court that the stress of the case had caused her to become depressed, and she was thus not fit to stand trial at that time. Judge Dinah Yehia was having none of it and decided to move forward without the recommended hearing. SCHWERIN probably expected jail time, but that's not what happened. Along with 250 hours of community service and being forced to pay back $10,000 to her former employer, she was put under an intensive correction order. She never spent a day in jail. This is somewhat like probation, but more customizable. The bare minimum rules stipulate that the criminal must let a parole officer in their house when asked, report for regular check-ins, keep police informed if they move, and follow any reasonable orders. More conditions can be added on a case-by-case basis. It's worth noting that a second hearing was scheduled for June of 2021, at which SCHWERIN may have been forced to pay back more money to Neil's Parts. Available sources, however, leave the story at a bit of a cliffhanger. The scam took place over 9 months, and she ultimately was sentenced to community service and an intensive corrections order spanning 2 years. Number 2. The Vacation Mom. Sarah Armstrong of Wokingham, Berkshire, destroyed her former employer by stealing £89,000, then went on to lie and brag while her ex-colleagues struggled to rebuild. The mom of two spent 5 years with ETZ Technologies before her big scam, and its devastating effects came into play. During that time, she made her way to head of operations, a high-paying position. Armstrong's scam wasn't exactly groundbreaking. Like a few others on this list, she handled accounts receivable for her employer, among many other things. As head of operations, she was free to figure out how to hide her activities. Keeping her colleagues in the dark, she began siphoning payments meant for the company into her personal account. This went on from November 2016 to July 2017. Armstrong's scam caught the company off guard on the heels of a fairly long stint in some highly trusted positions. Although the amount she made off with was less than her annual salary, how quickly she made it all happen was enough to cause severe budget shortfalls. ETZ Technologies was never a huge business, and the blow was more than enough to be considered crippling. Many in the company were laid off, and those that stuck around were left scrambling to rebuild the business. While available sources don't say exactly how she was caught, the scam eventually got her fired. The most likely scenario involves higher-ups trying to figure out where all that money went, and her virtual fingerprints being all over the system in associated transactions. Armstrong was caught and confessed to 1 count of fraud in March of 2018. The next logical step would be for her to pay back the stolen money and set things right, but that didn't happen. Instead, she told the courts that she had already spent all that money and couldn't pay what she owed. The court had no way of proving or disproving her claim. Rather than investigating further or looking for other ways to balance the scales, the court essentially let her go. Armstrong was given a suspended sentence alongside 125 hours of community service. All she had to pay was a £140 victim surcharge. Her former colleagues and superiors were left with a shell of a company to run. A large chunk of money going missing in such a short time disrupted vital operations and cut into staff pay, leading to layoffs and other complications. With everything they were going through, it's safe to say that EZT Technologies' remaining employees weren't too happy about what happened next. Armstrong took to social media to express remorse over the crimes and a desire to move on, but her content on the platform abruptly turned. Just months after winning the court's sympathy by claiming to be flat broke, Armstrong was posting photos from holidays abroad. She took her daughter along for the ride, hitting Spain and Turkey. At one point, she even claimed to have partied with football superstar Cristiano Ronaldo. While there was some understandable outrage over the posts, at the time of this video, available sources haven't said anything about new charges or further court proceedings. Her ex-bosses vented to the Daily Mail, saying Armstrong made a mockery of justice, destroyed lives, and a husk of a business in her wake. All signs point to the scammer making a clean getaway. Number 1. Save Our Soldiers. David Papagavriel and Terrence Kelly were no strangers to helping various charities. When this scam story broke in 2013, the two were trustees of Open Doors, a thrift store entity that helped fund equipment and other concerns for various charities since 1991. The shop originated in Westcliff-on-Sea, Essex. Ian Ellis and his son Peter Ellis were heading up Dove Promotions, a small fundraising outfit in Lancashire. Given its nature, the company was undoubtedly familiar with working for charities. When the two entities got together in 2013 and created their own charity, the only people who made any money were the four running the show. Given Open Doors' long-standing status in the community, the parties running a fake charity could have flown under the radar for some time. Instead, the fraudulent Save Our Soldiers charity imploded in 2 short years. There are several laws governing how charitable bodies can raise funds in the UK, and this venture ran in blatant disregard of those laws. Throughout the 2-year scam, random men were brought on board. They were placed in railway stations and dressed in Save Our Soldiers shirts and camo pants. This created a clear image of a charity effort aimed at helping veterans in need, and the donations rolled in. Ultimately, the scammers got themselves caught. Dove Promotions usually operated well within the law. In this case, they worked under a license that allowed them to sell merchandise and run raffles to raise money. Planting men to collect donations from the busy commuter stations fell outside that license. On 2 separate occasions, off-duty transit cops ran across the collectors and reported them to police. This wasn't enough to convince authorities to take action, and the scam continued. When an anonymous commuter reached out to the charity to ask some questions, she was offered a £5 refund, presumably to keep her from taking her line of questioning any further or bringing in third parties. Faking associations with legitimate charities probably didn't help. Record keeping was far from meticulous, but courts eventually found that only £14,000 made its way to real charities. Save Our Soldiers, in turn, claimed association with the Royal British Legion, ABF, the Soldiers' Charity, and SSAFA, which stands for the Soldiers, Sailors, Airmen, and Families Association. The Royal British Legion made a statement in 2015 categorically denying all of these claims. Papagavriel paid himself £65,000, which ended up on the books for Open Doors. Since this outfit typically posted less than £16,000 per year in annual revenue, the massive jump to £83,000 in 2014 set off some alarms. Making matters worse, Papagavriel and Kelly used money that reportedly came from Open Doors to buy a holiday caravan on Mersey Island. This action would have been less suspicious if they hadn't involved TripAdvisor and had rent paid directly to Papagavriel's personal account. Peter Ellis took the lion's share, ending up with over £100,000 between electronic transfers and other means. Ian, meanwhile, reportedly saw £54,000 fall into his lap. This is a drop in the bucket compared to the roughly £547,000 that Dove Promotion was found transferring into various personal accounts. As if all that wasn't enough, prosecutors in the case later found that Papagavriel's wife was receiving direct payments from Open Doors in the form of 14 checks averaging about £2,000 each. Most of the money vanished into thin air. Papagavriel was ordered to pay out £31,000 in 3 months or face 6 months in jail. Meanwhile, the Ellis duo had to pay back £57,000 whenever possible. This was about as harsh as it all got. Kelly was given a suspended sentence but had to stick to a 9 p.m. to 7 a.m. curfew enforcement for 9 months. Ian shared that fate while his son's suspended sentence balanced on 200 hours of unpaid volunteer work. Papagavriel arguably got the worst deal of the bunch with 250 unpaid work hours. Click to watch one of these next videos. Let us know in the comment section whether or not you think the government should be in charge of helping people with retirement savings.